a warm welcome to you, my dear children. With a question, I meet you again. I'm meeting you again with a cash book. No, a petty cash book question. This is the activity number 5, which is in your textbook. So you can refer to your textbooks, page number 109. We'll prepare this petty cash book. It's a quick one. It's a quick session, just to make you familiar or to improve practice of preparing the petty cash book. After every accounting lesson in this in your syllabus, we have done one question, one activity, which is given in the textbook. That's why I took this activity, which is given in the textbook for petty cash book. All right, let's read out. Harini's business has the following details. Harini's business. So this girl is Harini, her business, and she has been maintaining a petty cash interest of 3,000. Remember, Harini is not the petty cashier. Petty cashier is us. Let's think it is us. When we do accounting questions, we consider us as accountants or bookkeepers. In this case, petty cash interest is 3,000. All right, no problem. 3,000. And total payments for petty cash expenses for the month of January is rupees 2,400. Total payments for petty cash expenses. In other words, we have spent in the month of January 2,400 as petty cash expenses. In the month of January, 2,400 as petty cash expenses. Total payments, Total payments for the month of January, 2,400. It is given. And finally, they have mentioned petty cash expenses were reimbursed. Petty cash expenses were reimbursed on 1st of February. Is given here. Petty cash expenses were reimbursed. You know what is reimbursement? You know what is reimbursement. I'm not going to explain it again. Reimbursed on 1st of February. Okay. 1st of February, the next month, 1st. Reimbursement received from the main cashier. And 1st of March too. The next 2 months. I mean, 1st of February, we have received the reimbursement. Then again, 1st of March, we have received the reimbursement. You know that every month, 1st of or beginning of every month, the reimbursement must be received by the petty cashier from the main cashier. Okay. Reimbursement should be received. Petty cash expenses for the month of February are as follows. Okay. We have stationaries, traveling expenses, 2 pence per boat. 2 pence per boat. Yeah. Trishow charges, soap, half sheets, cleaning expenses, entertainment expenses, refreshments, soft drinks, bus fare paid to Viran. See, there's a name of a guy. We know if there's a name of an individual, where to record. We know. We did this. Not in this session, last session. All right. We have done a petty cash book, an example petty cash book, very clearly, like 100% from item to item. Each part we have done very clearly. Refer to the previous session, children. This is the activity in the textbook, but that was the example exercise, which is in the textbook. Yeah. All right. Better if you can watch the previous session, previous video, children, because doing a petty cash or preparing a petty cash book is first, should be explained, that we have done very well in the previous session. Then only we can take on a question and do it alone. Okay, right, so let's go and check what is required. What are we required to do? We are required to prepare a petty cash book that is based on the Impress system. Just like we have learned, according to the Impress system, we have to prepare the petty cash book. Limiting to 4 analysis columns. I told you this earlier. They give what are the analysis columns and how many analysis columns you should draw. You should include in the petty cash book. All right. So they have here mentioned Impress system, based on the Impress system, by limiting to 4 analysis columns. Limiting to 4 analysis columns. All right, and we should balance it as at 28th February. 28th February. Yeah, because there's no 31st of February. End of the month is 28th. On the 28th, we should balance the petty cash book. Okay. Then prepare the relevant ledger accounts. First one, we should prepare the petty cash book depending or based on the Impress system, and balance the petty cash book. Prepare the relevant ledger accounts. Let's do it. Okay. Petty cash Impress is 3,000. Total payments for the petty cash expenses in January 2,400. All right. First, let's draw the petty cash book, shall we? All right. Children, drawing the petty cash book is done in a simple manner. Follow this method in this way. Okay. Draw the T first. The T. Taking much space or much more onto the credit side. Draw the T by taking more space onto the credit side. Okay, less space onto the debit side. Okay, done. Then draw the header row a little wider than usual. All right, done. Now we have the debit side and credit side. This is the debit side. This is the credit side. Okay. And on the debit side, children, we have the received column. Received column. Ledger folio column. And date column. And date column. If you want, you can make, even if you can make this, even if you can do this, even if you make this column, which is the ledger folio column, even if you make it the center line, the dividing line between debit and credit, it's okay. Or you can take this as the dividing row, date column. Okay. So this is the receipts column or received column. Let's name the debit side. Let's name the debit side. Debit side, received column. Then ledger folio. Then date. All right. Received column, ledger folio column, date column. Onto the credit side now. Okay. Then we should divide the description column. voucher number, and payments column. Right? Description, voucher number, and payments column. From here onwards, we should have the analysis columns. The analysis columns. So divide the header row into two sections for analysis columns. We should have 4 analysis columns because it was mentioned very clearly in the question that we should limit our analysis columns to 4 columns. It was mentioned, right? It was mentioned that we should have only 4 analysis columns. There you go. We have 4 analysis columns. Now, four analysis columns. All right. If you want to check out the question again, petty cash book should be prepared based on the Impress system, limiting to 4 analysis columns. 4 only. All right. Only 4 analysis columns and balance it. Now we have 4 analysis columns. 1, 2, 3, 4. Okay. Done. Let's name the credit side details, or you can write description, it doesn't matter. Voucher number column, payments column, right? Name the analysis columns, Now you should look at the payments or petty cash payments, because to name the analysis columns, you should decide first what columns, what payments are there. All right. Let's look at the petty cash payments. We have stationaries. All right. 1 stationery expense, 1 traveling expense. We have stationaries. Okay, we'll put S for stationaries, T for traveling. 2 pens were bought. Pens is a stationery expense. Pens and pencils, it's a stationery expense. So again, S. Trishow charges. 3-wheelers. Traveling, it's a traveling expense. Trishow charges, for 3-wheelers to go here and there. Traveling expense. Bought 2 cakes of soap. Why do you buy cakes of soap? You're gonna eat cakes, right? No. Cakes of soap. You don't eat soap. Soap is for cleaning. So we'll put C for cleaning. Half sheets, it's a stationery expense. Of course, it's a stationery expense, half sheets. Cleaning, again cleaning. Entertainment, we'll name this column refreshment column. Okay, O entertainment. So we have 1 entertainment item. Soft drinks, again refreshments or entertainment. Bus fare. Bus fare, is it a cleaning expense? No, it's a traveling expense. So T. And paid to Iran, it is a separate item which is needing a separate count for Iran. Okay. Right. Now let's count what are the main payments which are there. We have stationaries. We have stationery items. 1, 2, 3. Yeah, we have 1, 2, 3. Stationaries, we have 3 items. Okay. Then for traveling, we have 1, 2, again 3 items for traveling. Okay, so likewise, what else? What other expenses are given to us? Now they have given to us stationary expenses we took, traveling expenses we took, again stationary, again traveling, cleaning. Yeah, we have another expense item. We can categorize all these cleaning items under one category, under one analysis column. Let's check how many cleaning items are there. We have 1, 2, only 2 C's are there, so only 2. Then we have refreshments or entertainment expenses. We have 2, refreshments or entertainment. We have 2. Okay, refreshments and entertainment, refreshments or entertainment. We have 2 items that we can take under refreshments or entertainment category. Now we have to decide which 4 columns are we gonna take into our petty cash book, because they have, in the question they have very clearly mentioned, it. See, prepare a petty cash book that is based on Impress system, based on Impress system, by limiting to 4 analysis columns. 4 analysis columns. We can't take more than 4 analysis columns, right? Okay, so we'll select 4 analysis columns from the main categories that we identify. We have to take the stationery. We have to take the stationery as a analysis column. We have to take stationery. We have to take traveling, yeah, because traveling has 3 items. So most items under which categories, we have to take separate columns for those. Most items under stationaries and traveling. So we have to take columns, separate columns for those 2. Cleaning and refreshments. We'll take cleaning and refreshments. Both have 2 items under each. We can take sundry or miscellaneous. We can take sundry or miscellaneous. In that manner, we can take 1 column for both these expense categories, sundry or miscellaneous, right? Because otherwise we can't take one category, we can't favor one category, because in the other category also 2 items are there. If we take one category out of these 2, it's unfair for the other. No, it's not like that. It's not like that, because the question says only 4 columns for analysis. For analysis columns, only 4 is allowed, because the question says so. We have to we cannot take these 2. We cannot take these 2. Cleaning and refreshments we cannot take. Okay, for both of them we'll take 1 common column, that is sundry or miscellaneous expenses. All right, let's name the columns. Let's name. Now we are going to name the columns, children. Okay. Traveling. Okay. Traveling. Stationery. Sundry. Then ledger, account, column. You got that? Why did we, why now, right now, why do we have to limit our analysis columns to only 4 columns? Because the question says so. Because the question has mentioned it. We can't help it. Now we have 3 analysis columns: traveling, stationery, and sundry. The 4th one is ledger account column. All right. All right. Let's name this, children. Petty cash book. Petty cash book. Here we go. First transaction offers payment. It's here. Stationery is bought 60. Traveling expenses 125. We'll take 2 payments at once and we'll record it at once. Stationery is 60. Traveling expenses 125. We'll take these 2, 60 and 125. And now we are going to the petty cash book and we are recording this, the expenses in the details column. Stationaries, all right, and 60. Payment column also you have to mention. Traveling 125. Am I doing it right? Well, I went on with the question. Yeah, this is how we do it, right? This is how we do it. We take the payments. Stationaries 60 and traveling expenses 125, and we record the expense items in the details column, and we put to the payments column and to the relevant analysis column, right? Oh, am I forgetting something? Am I forgetting something? Aren't you forgetting something? Who noticed the mistake I made? Who noticed? Children, this is unacceptable, right? If you went on recording with me the payments, if you started recording payments in the petty cash book, and if you did not notice that I have neglected something, I missed something, if you all did notice that, which means you're still not very familiar with the recording in the petty cash book, how to record transactions. Students, you all, if you watched the previous session and learned how to record transactions, start the petty cash book. Start to record in the petty cash book. If you watch that video, you should have remembered that first of all, we do not start by recording with the payments. We do not start to record the payments. First of all, you should record the receiving of interest. The interest. First of all, you should receive money from the main cashier. You should get money. From that money only, you start the payments. You should have a fund. First, you have to record the fund, the petty cash fund or the interest. Yes, so something to learn there, something to keep in mind. First of all, children, you don't go on recording the payments from the first day of payments. No. First of all, you record the receiving, the interest. All right. Let's check how much is the interest. Children, in this question, petty cash interest is 3,000. the petty cash interest is given and it is 3,000. Okay, and underneath it says total payment for petty cash expenses for the month of January. In January, the petty cashier has spent from the interest, he has spent this much. All right. Because it clearly says, you have to notice these things, children. Otherwise, you are not going to get the petty cash book accurately. You are not going to get the correct recording. You're going to misrecord. You're going to get it wrong. Total payments for petty cash expenses for the month of January is 2,400. That means if the petty cash interest was 3,000, pay attention, interest was 3,000 and total expenditure, total petty cash expenses, petty expenses for the month was 2,400. How much is remaining? How much is remaining? How much? Only 600, right? Only 600, right? Yes, only 600 is remaining. That is brought forward to the next month. The petty cashier already have how much? Not the entire 3,000, right? But he has at least 600. The 3,000 has been going down. But 600 is remaining at the end of the month. Okay, this 600 is brought forward to the next month. That is the beginning of February. Okay, it's given there. See, right. So petty cash expenses were reimbursed on 1st of February. It says here petty cash expenses were reimbursed on 1st of February. That is what we should record first. Yeah, that's how we make mistakes, right? We just went on recording the expenses, taking the stationaries and then the traveling and one by one. You don't record the expenses first. You record the interest, the receiving of interest. Before even before that, if you have a balance, you record the balance. Now we have a balance. Right, 1st February reimbursed, but before that, there, 2,400 is spent, but 600 is remaining from the last month, brought forward balance, and we should record that in the petty cash book. Balance brought forward. This is how you record. Not in the payments column. No, you record it in the receipts column. Okay. Okay, right. Now we'll go and record the receiving of interest or the reimbursement of interest. Reimbursed on 1st February. 1st February. All right. How much is the reimbursement? You tell me, how much is the reimbursement? Well, we know that the interest is 3,000. This is the interest. And we know that 2,400 is already gone and 600 is remaining. 600 is remaining. We have already calculated that. If 600 is remaining to start the next month, to start February, how much should be received from the main cashier? The amount spent. That is the reimbursement. The amount spent in the last month, which is 2,400. That is the reimbursement 1st of February. That should be our next item. Cash. Let's use the same color, right? Cash. I will move and record it here, 2,400. 2,400, yeah. What about the dates, children? Am I forgetting? No, I'm not forgetting. Right. This is coming from 31st January. Is it correct? 31st January. Now, children, it should be 1st of February. Brought forward is always brought forward to the next month first. The brought forward should be always the first of the month. And reimbursement also done on the first of the month, 1st of February. Right. We recorded the reimbursement now. Yeah. Now we have to start record the expenses like we started before. Okay. We'll start record the expenses. First expense, children, first expense. We have 3rd February stationery 60. We'll record that. And traveling 125. 3rd February date here. Shall we use another color? 3rd February stationery voucher number 160, and it should go to the stationery column, which is the relevant column. Stationery column 60. All right. Then we have 5th February traveling 125. As I can remember, that is the voucher number 2, 125. Okay. And that should also go to the relevant column. What is the relevant column for traveling, children? Traveling? What is the relevant column? Traveling. We have a separate column for traveling. That is recorded in the traveling column. That is recorded in the traveling column. Yeah, 125. All right, we check the next. Payment. We recorded stationery, okay. We recorded traveling 125, okay. Can you see the amounts? 60 and 125 recorded, done. Okay. Next we have 2 pence. 2 pence. So we'll record that under stationery. And try-show charges under traveling. 2 pence. That was on 6th of February. Details, pens, okay. Payments column, you record the amount, and under relevant analysis column. Then 8th February, try-show charges. Try-show, okay. 300. Payments column, in the payments column 300, and in the relevant column, which is the traveling column, 300. Just check whether the amounts are correct. I'm just putting the amounts quickly. For pens 60, and for try-show charges 300. 2 pence 40, right? Yeah, 40. For the 2 pence 40, huh? Can you see the amount? 40. For trishaw charges 300, that's correct. That's correct. We'll correct the amount for 2 pence. That should be 40. Then we'll take the next transaction. 15th soap. 15th soap. 2 cakes of soap. That means 2 soap packs. Before that, we'll correct the amount of pence that we entered. It's not 60, it should be 40, right? Yeah, it should be 40. And in the stationery column, 40. Right. Okay. Soap. The next item was soap. Yeah. Soap. 60. To which analysis column should it go? Should go to stationery column or traveling column or any other column? Let's see. Let's see. Cakes of soap, 60. That's a cleaning expense. I put the 60, the payments column, and I'm now asking you what is the correct analysis column. Is it the traveling column or is it the stationery column? No. Is it the sundry column? Sundry column? Are you saying sundry column? Sundry column. That's right, sundry column, yeah. It should be in the sundry column. Yeah, okay. Then we recorded the soap expense also. 18th, we have bought half sheets, 250. And again, cleaning expenses, 150. 18th and 23rd, okay. 18th, half sheets. Let's say A4, 250. 250. A4 sheets, 250. That should go to stationery column, 250. Now I'm running out of space, so I'll move to this side. Right? Okay. Then 23rd, we had another transaction, that is 23rd, we had another transaction, that is cleaning expenses, 150. Cleaning expenses, 150. Right. We'll write cleaning and put the amount 150 to the payments column and the relevant analysis column. We don't have a specific column for cleaning, so we have to put it to the sundry column, right? Not to stationery, not to traveling or stationery, put to sundry. Right. 150. All right, I can feel that we are running out of space a little bit. Okay, so we will extend the lines, shall we? Extend the lines. Because we have to balance this book, children. We have to balance it, right? Balancing is sometimes, some people say that it's hard, it's difficult, it's confusing. So we'll try to balance it. Okay, right. All right. This is the center line. And yeah, I have taken the date column as the dividing column, dividing the debit and credit sides. Okay, right, that's it. Moving on. What next? What is the next expense? Right, we recorded the cleaning expense 150, entertainment, which means it's a refreshment item. Okay, we recorded cleaning expenses 150. Then we have 24th, entertainment expense. It is an entertainment expense, which means entertainment or refreshments 350, and soft drinks 220. Both are entertainment expenses 350, 220. So I will write 23rd entertainment, right? Entertainment, just in short, 350 in the payments column and in the relevant column, which is the sundry column. Again, next 24th, soft drinks. I told you, right, the tea and coffee and refreshment expenses, soft drinks and all. 220. That is also in the sundry column. Yeah, I think we are done. Let's check. Soft drinks also we recorded. No, we have two more. Bus fare and paid to Viran. There is a guy's name, somebody's name. Let's take the bus fare. It should go to transport or traveling. 26th bus fare 170. 26th bus fare 170. Then the relevant column is traveling column 170. Finally, in the end, we have the Viran's payment that should go to the ledger account column. Yeah, 27th Viran. How much was it? How much? Paid to Viran 500. Okay, let's put that 500 into the ledger account column. Before that, payments column. We should record in the payments column. Then to the relevant column, which is the ledger account column. All right, done. We recorded all the transactions, all the payments. All right. Yeah, we are done with the recording part. Now, can you help me to balance this book? Balance it out. Let's balance it. Aren't we forgetting something? Again, I'm asking you, aren't we forgetting something? Yeah, who said that? Double entries. Where are the double entries, children? Well, unlike in cash book, soon as we record a payment in the relevant column, we don't record the double entry of that. Otherwise, soon as we put 60 here, here in the stationery column, we don't go and record that 60 in the stationery account. Soon as we put 125, we don't go and record that 125 in the traveling account. It doesn't happen like that, children. First, we have to total all the analysis columns. take the totals of all the columns should be totaled. All the analysis columns, right? Should be totaled first. We'll sum up the analysis columns. Here we go. Taking it up, further up. And let's draw the sum boxes. Sum boxes, Sum boxes. This is the payment column. We need a sum box in the payment column. And where's the received column? I have to move to this side to check the received column. This is the received column. We need a sum box in the received column too. Alright, sum box in the received column too. Can you see the bottom? Let's just mark the columns first, Okay. Payments column. In this column, we need a sum box, so we'll draw the upper line and we'll take the cash book, the petty cash book upwards, so now we have space. Now let's draw the sum box. All right, and for analysis columns 2, we need to sum up. Okay, so children, you remember that I have not recorded the voucher numbers, sometimes not the dates, but I'm just trying to rush on to finish this question. The important parts like balancing and the reimbursement, those are the important parts. You must remember to record the voucher numbers, the dates. You can't forget those things. All right. All right. So let's balance it off. First, we'll take the totals. This is the overall look of the petty cash book. If you can just pause your video and see the overall layout of the petty cash book. The layout of the petty cash book. It looks like this. Now, children, drawing the sum boxes. In other words, if I say sum boxes, some people may think, what is this Prabhat is talking about? Sum boxes, yeah. By saying sum boxes, I mean these boxes or double lines where you take the sum, where you sum up the amounts, the column total, and you mentioned the column totals. Those are the sum boxes. Okay. These sum boxes should be drawn with enough space, by keeping enough space in the table, in the petty cash book, right? At least this much of a space if you keep, for your balancing part, that's good. That will be enough. All right. Okay, now let's take the totals. First, we are going to take the total of the received column. First, we are going to take the total of the received column. It's very easy. Now we know how much is the total really. How much is the total? Right? It's 2,400 plus 600. This is the balance. And this is the reimbursement. 2,400 plus 600, 3,000. We have to put the 3,000 in the sum box of the received column. And the same sum total, the sum total should be mentioned in the sum box of the payments column. The payments column. Payments column. Same amount. All right. Same amount, same total that you got when you summed up the received column. The same total should be in the payments column, right? Likewise. Okay. But although you put the same sum total here in the payments column, now what you must do is you must take the real total of the payments column. That is the adding up all the amounts in the payments column. The real sum total of the payments column, right? Let's take the addition. 60 plus 125, then 100 and 225. Take the sum. 350, 220, 170 and 500. Let's mention the total. 2,225. Did you get the same total? 2,225. Did you get the total? 2,225. All right. If you got the total, this is the real total of the payments column, right? But in the sum box, you have mentioned the sum total of the received column in both sum boxes, right? Okay. Now what you must do is minus or subtract 2,225 from 3,000 and take the difference. That is the balance. That is the balance. What is the difference between when you minus 2,225 from 3,000? What is the balance? 775. Did you get this? 775. Did you get the balance? 775. With the balance, right? This should go as the difference between 2,225. The difference, that is the balance, right? So this is balance carried down. Balance carried down. The same balance should be taken back to the debit column as 775 to the next month for the petty cashier to start the next month on 1st of March. And that is the balance brought forward. 1st March. Balance brought forward 775. So you took the balance carried down and you took the balance brought forward to the debit column, and now the reimbursement of the next month should be here in the next month. This is the month of March. 1st of March. but we are not going to take the reimbursement now because that is the next month. Okay, this is the next month. Now let's take the totals of the analysis columns, right? Taking the totals of the analysis columns. We have traveling column. Have to take the total of the traveling column. All right. Traveling column, the total must be taken. How much should be the total? 300 plus 125, 425 and 170. That is 595. Is it correct? Is it correct? 595. Is it correct? 595. All right. That's correct. 595. Then we have to take the total of the stationary column. It's 350. When you add this up, you get 350. $350, right? 350. Yeah. Take the total of the next column, which is sundry column. You get how much? 700 and how much do you get? 780. 780. When you add these up, yeah, 780, yeah, okay. And this column, only 500 is there. Only 500 is there. In the ledger account column, only 500 is there. Fine. So we'll put 500, which is the total of the ledger account column. Children, we are almost done. We are done with the petty cash book actually. We are done, finished. But drawing the ledger accounts. Drawing the ledger accounts, relevant ledger accounts, is yet to be done. Yeah, we must do that. Because the question has very clearly mentioned that we should draw the relevant ledger accounts too. Yeah, it has been mentioned that we have to draw the relevant ledger accounts too. Okay. Right, let's draw the ledger accounts. We have a blank slide, we have a blank page. Let's start drawing the ledger accounts. I'm just going to draw the T accounts, children, the T formats, because it's going to take time. But you should draw the column formats of the ledger accounts. All right. T accounts. How many T accounts do we need? Well, let's check out. All right. For the time being, just for now, I'm going to draw 1, 2 ledger accounts, right? 3, 4, 5 accounts. All right. And we'll check how many accounts do we need. For that, we need to go back and look at the petty cash book, children. Let's go back and look at the petty cash book. I'm going to zoom out just for you to see, for you to get the full view of the petty cash book, right? We have 4 analysis columns. How many analysis columns? We have 4 analysis columns. Analysis columns 4. For each analysis column, we need a ledger account. So 4 ledger accounts altogether for analysis columns. Is that correct? Is that correct? No, that's not correct. Pay attention. That's how you learn. When I say something wrong, you must have a doubt about the thing I said. You must question me. You must question that thing. Yeah. Although we have 4 analysis columns, children, 1, 2, 3 and 4. 3 and 4. Although we have 4 analysis columns, these 3 need separate accounts. All right. So 3 separate accounts. But in the ledger accounts column, in this column, children, how many entries do we have? For each and every entry, we need a ledger account. How many entries do we have? Let's say we have 1, 2, 3 entries in the ledger account column. Then we need 1, 2, 3 separate ledger accounts for those 3 entries. All right, I'm just hoping that you can see this clearly. But in this question, children, we have only one ledger account entry, which is this one. So plus 1 for the 3 analysis columns, 3 ledger accounts, and for ledger account column, in the ledger account column we have only 1 entry. So 3 plus 1, actually we need 4 ledger accounts. All right, is that all? Let's zoom in and see. Is that all? Is that all? No, we need a cash book. Why? There are entries in the debit side of the petty cash book, which is going to the cash book. Which entries? The reimbursement, receiving of the interest, and the reimbursement. So to the cash book, these entries should be entered. Right, there you go. Cash, the receiving of the reimbursement at the beginning of the month. 2,400, the cash reimbursement. Okay. So altogether we need how many ledger accounts, children? 1, 2, 3 plus 1, 4 plus the cash book. So with that, we need 5 ledger accounts. Okay, let's check whether we have the enough number. We have the enough number. Okay. Yeah, we have the enough number. We have the sufficient amount, the number of ledger accounts that we need. Let's name them. Traveling, stationery, sundry. The analysis columns. For the analysis columns, each analysis column you need a separate T account or ledger account. Sundry. Then Viran. This is not the ledger account. This is for the ledger account column. It should not be named as ledger account. Okay. As you can very well remember, I told you very clearly that for the ledger account, you don't draw a ledger account called ledger account. For the ledger account column, you don't draw separate ledger account. For entries, each entry, you should draw a separate ledger account. So in this one, in this ledger account column, we have only one entry. That is Viran. That's why we must draw a account called Viran. Okay? Viran. And the cash book. Yeah? All right. First, let's record, children, the cash book reimbursement, the reimbursement which we received from the main cashier in the cash book. Petty cash book, debit. So cash book, credit. Where's the cash book? Here. 1st of March. Description is petty cash. $2,400. So we recorded this. All right. The next entry, this one, stationery, 60. Right? This should go to the stationery account. Should go to the stationery account, this entry. And then traveling, this entry, 125. It should go to the traveling account. Then pens, 40. It should go to the pens account. No, children. We don't record each entry. We don't record double entries for each. No, we don't record double entries for each. We record the column totals. Okay. No double entries for each and every entry. Payment column totals we record in the relevant ledger account. So traveling column total is 595, 595. Let's record it in the traveling account, ledger account called traveling. Stationery account total 350. Let's record it in the stationery account. All right. Traveling 595. Which side? Debit or credit? Debit or credit? It's debit because petty cash book was credited. This side is the credit side. Yeah. 595 and 350 is in the credit side of the petty cash book. And the expense accounts should be debited. Every expense account should be debited. 595. Stationery account 350. Description, petty cash. Petty cash. Here also description, petty cash. $350 we recorded, then that's all right. 780 is the total of the 780 is the total of the sundry column, and Viran's account 500 should go to Viran's account. Let's record the 780 in sundry account. Where's the sundry account? It's there. Debit side 780. Petty cash is the description. Viran's account 500. Same description. Petty cash. Put the dates, children, the very last date of the month when you record the column totals in the relevant ledger accounts. 28th February. All right. 28th February. Don't forget the dates, children. Don't forget the dates. 28th, the last date of the month should be mentioned in the relevant ledger accounts. All right. Now, we are almost done. Actually, we are done with the petty cash book. Zooming in on the petty cash book, I don't think we can get a full view because our petty cash book is filling. It has filled the entire screen. Just the important things, children. Taking the total of the received column, putting the same total in the payments column, taking the total of the payments column, taking the total of the payments column, and checking the difference between and taking the difference between the total received and total payments. That is the balance carried down. You put the balance carried down, and the same balance carried down should be balance brought forward, should be mentioned on the debit side as balance brought forward. All right. For the next month, when the reimbursement comes, it should be here. Okay. That's why I said when it is zoomed out, it gives a full view of the petty cash book. Children, once you finish the petty cash book, you can record the double entries of the received, the reimbursement of cash, and the totals of the analysis columns. Okay, likewise, all the relevant expense accounts debit, cash book credit, because cash going out from the cash book coming to the petty cash book, cash book credit. That is the reimbursement. So children, we took a very explanatory, very descriptive activity, did it very clearly. Sometimes you may think, wow, so much work into the petty cash book. If we spend so much time in the petty cash book, the entire time of the paper, like ours. No, children, it's not like that. Teaching you takes time. Explaining everything takes time. But you need to practice preparing the petty cash book and finish this type of a question in 5-6 minutes. Most of the years, most of the past papers do not have an entire petty cash book as a question in the structured paper. In the second paper, you must have noticed that there is no full petty cash book to prepare in the recent years, in your past papers. But the knowledge of preparing the petty cash book and how the analysis columns are divided, how the reimbursement is made, how the balance is carried down and balance is brought forward, the entire overall knowledge will be important to you. Even in the MCQ paper, you will get more than altogether more than 5 questions from the petty cash book from this part. All right, in the first paper and the second paper. It could differ. So with this, children, we end this session. We did a petty cash book and the reimbursement of the petty cash book, balance the petty cash book, and prepare the relevant ledger accounts. I hope to see you again with the next lesson. It's a new session and a new lesson. That is lesson number 9, unit 9, bank account and bank reconciliation statement. See you soon. Thank you very much.